So I want to go over 6 reasons to buy Tesla stock. Reason number 1, Tesla is doubling the size of its full self-driving beta program. In the upcoming update, the size of the test fleet can increase by a factor of 10. Full self-driving is here, folks. The technology is so advanced. You're going to see a full self-driving fleet soon. Tesla's full self-driving package costs $10,000. At the outset, when you purchase a Tesla, you have to pay $10,000 up front for the full self-driving package. Think about how much revenue that's going to bring in. Plus, they're going to charge, it sounds like, somewhere in the ballpark of $100 a month, monthly subscription type model for this full self-driving capability, which I think is well worth it, and it's going to bring in so much revenue for Tesla. And then after that is going to come the autonomous ride-hailing network. Tesla have its own Uber of sorts. Everyone who owns a Tesla, you're going to go to work and your Tesla is going to be out making you money, Ubering people around. Tesla has the potential to become a dominant player, and even in a very conservative case, a competitor, let's say, to Uber and Lyft, and they will bring in a ton of money because they will have much lower costs. It will be cheaper for Teslas per mile. The per mile cost is much lower because they will be autonomous vehicles. You don't have to pay a driver. Reason number 2, Bitcoin. Whether you hate it or love it, you can't deny that it was a good investment for their balance sheet. All the cash they have sitting on their balance sheet is just decaying. It's losing value every day. The dollar is losing value. And as ARK reported, I touched on this in one of my videos on the ARK Insights report. If all S&P 500 companies were to allocate 1% of their balance sheet to Bitcoin, the price of Bitcoin would double. Now, Tesla's already made more off their Bitcoin investment than they did selling cars in the entire past year in profit-wise. If each S&P 500 company, this is a stretch, but if they were to put 10% of their balance sheet into Bitcoin, the price would go up by $400,000. Whether you agree or disagree with Bitcoin, there's no denying it's trending, it's catching on. We're going to see more and more companies start to dabble in it, and that's only going to keep the price going up. Number 3, if we look at Tesla's vehicle deliveries, I wouldn't be surprised to continue to see them growing their vehicle delivery rate at a 50% clip. They're in the midst of a global production ramp right now. They're going to have 2 additional factories coming online. The one in Texas, Austin, Texas, and in Berlin, in Germany. Now, the one in Texas will primarily be producing the Cybertruck and the semi-truck, it sounds like, and the one in Berlin will be producing mostly Model Ys and Model 3s. Europe is a vast market, and if Tesla was able to sell 500,000 cars without these 2, just imagine. I think conservatively, by the end of this year, you could see Tesla selling 1 million cars if all goes well, and very well by the end of 2022, they will definitely be selling 1 million cars. I think the number could be much higher, but just to be conservative. Reason number 4, Tesla does not spend any money on advertising. Tesla's advertising budget is $0. They don't need to advertise because their product is just so great that it spreads by word of mouth. And you think about how much money they save. Just to put this in perspective, during the Super Bowl, advertisements for a 30-second ad ran, I think, $5.5 million. So if GM, which I know that I saw at least one GM commercial, it's a pretty boring game, so I didn't really pay that much attention, but let's just say GM had 4 Super Bowl commercials, that's $22 million that they basically just threw away. Yeah, they'll get some sales from it, but Tesla, on the other hand, can sell just as many cars, well, obviously not yet, but eventually, without advertising, because the product's so great, they don't need to force it, down everyone's throats watching. You go to Tesla because you want the car. They don't have to come to you. I think that's a fantastic business model. And just think about it. Tesla now has $22 million extra dollars that they can pump into R&D to keep their cars way ahead of all the competition. Not to mention, Tesla only has to focus on electric vehicles. All these other car companies have to focus on their dying ICE industry, which is going to be very difficult to, switch over their factories from ICE-producing vehicles to electric because everything is completely different. There's a lot less moving parts in an electric vehicle than an ICE or internal combustion engine. They're going to spend almost $3 billion on advertising in the US. $3 billion. That's $3 billion extra dollars in Tesla's pockets. They could use that money to build a whole gigafactory. I touched on this briefly in the last video, but I think people are really sleeping on Tesla's potential in their energy side of the business and their solar panels. Tesla just had a massive quarter with their solar panel sales. They experienced a 59% increase over the deployment from the same period last year. 2020 solar deployments increased 18% more than the prior year. They deployed a record 1,584 megawatts of energy storage in Q4, almost 200% increase year over year, and 100% increase quarter over quarter. The energy business is going to be a major part of Tesla's strategy moving forward. And I think it even has the potential to eventually overtake their revenue from the cars. If you look at the top 10 companies in the world by revenue, if you go a year or two back, this proved my point even more. But if you see here, you see State Grid is an electricity company, number 3. China Petroleum, oil and gas. Royal Dutch Shell, oil and gas. Saudi Aramco, oil and gas. You see a trend here? Oil and gas. Number 9, Volkswagen. Number 10, BP. 11, Toyota. Let's just look at the top 15. Number 13, Exxon. So out of the top 15 companies, top revenue producing companies in the world, you have 1, 2, 3, 4, 5, BP, 6, Exxon, 7 companies that are either in oil and gas or electricity production. Then you have 2 companies, Toyota and Volkswagen, automotive companies. So of the top 15 companies in the world, if my math is correct, 9 of those companies are involved in the oil and gas, energy, electricity, and automotive spaces. Those are all the things Tesla's trying to do. So just imagine the potential that they have, waves of disruption that Tesla will be bringing. They already have caused so much disruption, and they're just really beginning. The next phase of massive growth for Tesla is going to be in their energy division. In 2019, Musk said that Tesla Energy is becoming a distributed global utility and could outgrow the automotive business. Tesla has a new gaming computer and plans to sort of compete with Xbox and Steam. Is there anything this company can't do? People have been critical of Tesla for, devoting a team of engineers to develop these video games for people to play. But when you think about it, it makes perfect sense. They're not going to have to be driving their car. So what are they going to do in that hour car ride? They're going to be watching Netflix. They're going to be kicking back, playing The Witcher here, whatever they want. I think this is genius. It's making it more than a car. It's a full ecosystem that you're going to now be a part of Tesla. Not to mention, the gaming computer will be powered by another one of my favorite companies, AMD's Navi 23 GPU. Fantastic company. I've made videos on them as well. Check it out. I'll link it in the comments below. Musk has already indicated how critical he thinks that entertainment is going to be when cars can drive themselves, and it makes perfect sense. People, they're going to need something to do. Not to mention, he thinks that the cars will be fully autonomous by the end of this year. I think the technology is already there, but they're being very careful with the rollout, and you can't blame them. I think they're doing it the right way. You have to take an overly cautious approach, because the second something goes wrong and there's a problem, the regulatory scrutiny is going to be all over them, and they're going to get clobbered. So I think that this is the proper way to go about this. They want to make sure everything is perfect. We already know that the autonomous driving system is safer than a human driver. It is better. It is going to save many people's lives. There's going to be way less accidents. Also, I forgot to mention in my notes here, I just saw a recent conference call. Elon Musk said that he thinks it's only a matter of time until Tesla is the dominant player in the solar business. So just imagine what that's going to bring on top of the already #1 car business. But wait, the excitement doesn't stop there. Tesla Semi, ready for production. The only thing that's missing is these battery cells. Obviously, this huge truck is going to need a ton of power to operate. The Tesla Semi is coming soon. Semi-trucks are responsible for a huge portion of the pollution that comes from automobiles. So this is going to be huge, and I think it's a no-brainer for companies to adopt these semi-trucks, especially when it's going to be a lot cheaper to do it, when the autonomous driving is ready to go. You're not going to need to pay a driver. I'm sure for a while as we transition, there's going to need to be a driver. But these trucks will largely be driving themselves. They'll be operating in a convoy that's more energy efficient, reduces drag if you have 10 trucks following each other. And Musk has said it's actually incredibly easy to make a car follow another car or a truck follow another truck. It's one of the easiest things in autonomy to do is just have it follow something. So just think of all the efficiency this is going to bring, all the pollution it will reduce. Lastly, so how to trade Tesla stock. This is something I want to start doing more. You look at how ARK handles it. They're fully transparent. They release a list of all their buys and sells. ARK, when their positions are at the high, they trim them. Tesla, Square, Tesla got up to 900 and whatever. They sold some shares. They don't sell all of them, just a small portion. They sell it, and then when it drops back low, March 5th, it was at a few days ago, Tesla hit, it's in the $500 range, $550, let's say. ARK bought a ton of shares. They do this over and over again. 17,000 shares they bought just on March 5th. They've been doing this. There's many other days. Here you go, down here too, actually, even bigger, 71,000 shares. They're buying up Tesla shares cheap. When they get back to the high, They'll trim the position, they'll sell some. And this is something that it's easy to say in hindsight. Hindsight is 2020. When Tesla was up to 9 some, Tesla gets to this high here, and you can see the resistance. It gets up to, 880, 900, let's just say, 900, 880, and it couldn't break through here. This would have been a great window to trim your position. You had about a month here where it kind of just traded sideways, and then it dips. And it's going to dip, and it may continue to dip. And this is a great opportunity. I'm going to be buying more shares. If Tesla's in the 500s next week, oh boy, I will be so excited to buy more, as many shares as I can. And then when it gets back up to the high, trim a little. Now, this is something that I haven't really done, but I think it's a better way because you just look at it like this. Let's say you own 550 shares of Tesla, right? So it gets to this high point, you sell 50 shares. Now you have pretty much $50,000 to deploy. When it dips low, now you can get shares cheaper, or if there's other companies you're dying to own, or opportunities like I think ARK is trading at a very attractive prices right now after this huge dip. Then you have all this capital you can deploy versus I've kind of just had my money sitting, it's hostage here at the end of the day because I haven't sold at the top. So now I'm kind of just holding the bag down here. Not that, I think that's fine too, but I think I can use this strategy to get a little bit ahead. And I would never sell, more than maybe, let's say, 5-10% of my total shares. I'm not talking about selling all the shares because, yeah, there's a chance it keeps going up. But that's the importance of, taking some profits, I think. And everyone's situation and goals are different. But someone like me, in order to be able to buy those more shares, I'm going to need that cash. I can only buy so many shares off my paycheck. So I think it'll be interesting to see. And there's a good chance it gets right back up here and it breaks the support line. If we get a lot of positive news. We'll see. So I'm definitely holding the majority of my shares, but I think the next time it does get high, up to this $900 range, I might consider doing the ARK approach, trim it a little bit, and with full intention to hold the rest of my shares and use it as an opportunity to buy low again when it dips. So what do you think of Tesla? Let me know in the comments below. If you enjoyed this video, don't forget to like it, subscribe, and check out my other videos. Let me know what you want to see more of in the future. This is Vinny from the Investment Club, and I'll see you next time.